Hello, hello. Good afternoon. Just want to check if you can hear me okay, you can see me all right. Let me know. Hi, Sven. Hi, Sumit. Hi, Mangesh. Hi, Ditendra. I'm doing very well. Yourself? Hope you're well. Very good. Any interesting trades you guys entered recently? Let me know. I've been trading gold. I was just selling gold down just then. Put into the chat. Let me know if you've entered any trades recently and if you've got any questions about your trades. We'll give it a couple of moments before we get started. Good to see. We'll get started shortly. Here with IronFX on a webinar series. Today, we're doing a live trading analysis. So I'll be sharing with you some views, my thoughts, my ideas of the markets, where prices could head towards. So, if at any point in time you do have any questions, do let me know. One more minute, we shall get started. Gold and Aussie CAD. Sure, for sure, Sven. I'll be more than happy to look at gold. I have been trading gold a lot. I don't normally trade gold. I've only just started. I only focus on the majors on the FX pairs, but I've just started focusing more on gold as well now. Alrighty. Let's get going. All right. So again, welcome. Thank you all for attending the session. Good to have you all here today with me, with IronFX on a webinar series doing the live market analysis, live trading analysis, just to share with you all some possible trade ideas, some possible trade setups based on the way I look at the markets, how I anticipate prices could move towards. So looking forward to it. But as usual, a quick disclaimer, the information in this webinar should not be considered as investment advice or an investment recommendation, but instead as educational material only. This material is the personal opinion of the author and the client's investment objectives, risk, and tolerance have not been considered, right? So please remember, if you're going to be trading, even based on this analysis, do remember, take your own trade and do your own due diligence before you jump into a trade. Make sure it fits with your trading analysis, make sure it fits with your strategy before you jump into a trade. And more importantly, make sure it fits. You're not over trading, right? Not over trading, not over leverage, just so that you can manage your account better. Based on my experience, I've actually seen that it's not so much a bad trading strategy that hurts the accounts the most. It's when you over trade and over leveraged where your account gets the most badly affected. How do you have a partnership? I don't know. I have no idea about that. All right. So let's get going. Take that away. Bring this up. All right. So how I approach the markets, what I do, first off, I always look at the news, right? I always look at the news. I always look at what has happened, what's coming up, and how it could affect prices. It could drive prices in any particular direction. So just giving you a bit of an overview of what happened this week. Right? I know there are some questions about gold and Aussie CAD and Dow. We'll get to that, but let's do a quick review first. First off, Monday this week, we saw the Swiss franc with their CPI data month on month being released was a minus 0.2%, expected to be a 0.5, got released at a 0.6. So better than expected there on the Swiss CPI data. And what we actually saw was that with that, we actually saw the Swiss franc drop, right? The Swiss franc drop as usual. The US Swiss franc, strengthening of the Swiss franc, we saw this turn down. Okay. A low volume. I'm almost speaking as loud as I can, so tune it up, right? So we saw this drop on the US Swiss franc because of the inflation data being higher than expected at a 0.6% there month on month. What you notice as well is that as much as it dropped, it bounced back up quite quickly. So why did it bounce back up quite quickly? Is because this is a month-to-month number, right? Month-to-month does have an impact, but not that big an impact, and so we see price bounce back up. Okay, so you can see this came down on the release of the news. It came down, and then after that, it bounced straight back up. More importantly is what we saw following on from that. On Tuesday, 14th of Feb, New Zealand, right? The New Zealand with their inflation expectations was a 3.62%. 3.62%. It got released at a 3.3, right? I see a hand up. If you have any questions, put it into the chat. If it's about volume, let me check. Anyone else having a volume issue? Let me see what I can do about this. Anyone else having a volume issue? Thank you, Syed. Okay, great. So, Jitran, if you have a problem with the volume, turn it up. Bring up that volume. Okay, thanks for that, Syed. Okay, great. Thank you. Thanks, Sven. Okay, good. Because if I had to figure out what to do with volume, it's going to take a while. I'm terrible with technical stuff on the computer. Okay, so coming back to this, Kiwi dollar with the inflation expectations was 3.62%, expected 3.3. So what we actually saw here is, as you would expect, because inflation expectations drop, where was it? We saw it drop as well. Where was that? Why did I lose my line? I drew that on Tuesday. There we go. All right, we saw this drop. We saw the reaction to the news. Again, trading lower. So it all comes in quite released as expected, released, and we saw that reaction as we expected, right? Kiwi dollar forming a resistance before the news. We saw it form a resistance at these levels here, at the 0.6365 level. News came out, got released, drop in inflation expectations. We saw the big push downwards. Okay, but that's not the fireworks for the week. The main fireworks for the week was the US CPI data. US CPI data month year to year was a 6.5%, expected 6.2. It got released at a 6.4. So I can tell you that based on analysis, based on reading a lot of different things, markets were fully pricing in the idea that inflation in the US was likely to go from 6.5 to 6.2, was likely to drive inflation being a slowdown, being increasing slowdown in inflation. What happened? At 6.4. It got released at 6.4, which indicates a stronger or slower slowdown. Oh no, slower slowdown than expected. Right, it's a bit of a tongue twister. A slower slowdown. Right, so basically it went from a 6.5 to a 6.4. Big surprise to the market. Big surprise leads to big price movements. Right, big surprise leads to big price movements. What we saw, was at this point. Move it right across. There we go. Okay, I'll zoom it in so you can see. On release of the news, no, that's 15th. Let me find the 14th. All right, there we go. There we go. Okay, on the release of the news, what happened was that you can see here, 14th at 9:30 p.m. Because it got released at 6.4, the number was better or higher than expected. We saw the first initial move push up from that 102.94 level up towards 103.20. Big push towards the upside there on the dollar index. But like I was telling you, markets were pricing in the expectation that it was going to be 6.2. Can almost guarantee you that there was a lot of sell orders expecting the dollar index to drop further. And if you have sell orders, your stop loss will be hit as it surges towards the upside. What happened? Pushes up, hits a lot of stop losses, get to that point, and then we saw the big push back down. Right, we saw a big push back down to the tune of about 58, almost 60 pips towards the downside. Right, a big push towards the downside as a reaction, and then after that it bounced back up again. Right, bounced back up and then traded higher. This is the normal or the expected move that 6.4% was supposed to result in. So this is the dollar strengthening because at inflation or CPI at 6.4%, that is going to indicate to the Federal Reserve that inflation, while it is slowing down, is possibly not slowing down enough. Right? While it is slowing down from a 6.5 to a 6.4, it's slowing down, but it's not slowing down as they would expect at a 6.2. So if inflation is not slowing down as expected, what's likely to happen is the Fed Reserve could continue on with their interest rate hikes, could even be aggressive with their interest rate hikes, expecting inflation to be sticky towards the upside, right? So that's why we see the dollar strengthen with the expectation that interest rate hikes could be more likely, right? Interest rate hikes from the Fed Reserve could be more likely. So that's why we saw this push up. One thing, how many of you, if I ask a question, how many of you do trade news events? Do you trade news events? Put into chat, let me know. All right. Okay. Very rarely they do. Okay, good. The thing about news events is that a lot of traders try to rush in. They try to be going, oh, a news came out, I have to be the first one to get into a trade. If you're the first one to get into a trade, then what would most likely happen is you see price shooting up, or as price is shooting up, you probably would have got in somewhere in the middle, right? Somewhere in the middle. And what would happen? You would have made a little bit of money before it retraced back down and would have potentially hit your stop loss. Okay, so that's one thing that will always happen, pretty much always happen. Where it shoots up, you try and get in, try to be the first one. You're never going to be the first one in. You get in halfway, it's going to retrace straight away, hit your stop loss, and you're left wondering what's happening. So that's what happens for people who try and trade being the first one in. Then what will happen is that you look at it and go, okay, I won't be able to be the first one in. And like Syed says, look at the news and try and predict what could happen. But then it comes to the point where you try and predict. So you're not entering on that first candle. You try and enter before the news, right? You could try and enter before the news. And like I was telling you, markets were fully anticipating a move on the inflation to a 6.2%, which would mean a big weakening in the dollar index. And then what happens? If you did enter before the news, it would have shot up, hit your stop loss, and then after that, turn back down again. So again, don't enter before the news. Okay, so don't try and be the first one to get in after on the news release, and don't enter after before the news. Either way, you're most likely going to be caught out by what we call a whipsaw, right? A push upwards or a push downwards, and then a sharp retracement back down. So what I call whipsaw. What I would suggest is to understand this pattern. Where you're going to see price push. Well, wait. You're going to see price push up, push down, and then up again. Right? Push up, push down, and up again. So same thing, push up, push down, and up again. Okay, so that's how you avoid a whipsaw. Push up, push down, and then up again. Two ways to look at this is that first move. I saw this push up. Also, I was actually trading this news event. I saw this push up and then reverse strongly. Almost immediately, I left a line there to signal that this was the high from the news. Then it shot all the way down, tested this level, and bounced back up. Once it bounced back up, I said, okay, great. This is the low of the news, right? The high of the news and then the low of the news. Then from there, what I'll be looking at is I'll be most confident when price breaks either the high or the low, right? In fact, I wouldn't even be looking for either the high or the low. I'll be, because of the news, I'll say, hey, 6.4, should be looking at further interest rate hikes. We should be thinking that the dollar will strengthen. I'll be only looking for price to break above the high. Okay, then what will happen if you're super risk adverse, you want a safer area, I'll be only looking to get into trades after it breaks the high to move towards the upside. Alternatively, the more risky approach will be also to understand that as it bounces back up, hits a level, turns back down, then I would say, okay, great. I have another high here. A riskier move will be for it to break above this point before I get into a trade. Okay, so this is the early. Let me do this. What I would always say is this is the early entry. Right, I know I'm doing this on the dollar index. This can also be applied across any currency pair as well. And then after that, I have this as the so-called safe. I put it in inverted commas because it's never a safe entry. It's a safer entry. Safer entry. Okay, so I have my two levels there just to identify early entry, which is more risky, and then the safer entry, which is less risky, but still always a level of risk involved. So that's what I did when I saw or when I was trading the dollar index or that news release. Following on from that, we did have CPI data for the UK on Wednesday, right? CPI data in this case for the pound. What we actually saw was, do I have it there? Oh, where did my lines go? Okay, so CPI data on Wednesday. Oh, okay, no, that's why. Hang on, I'm getting lost. Okay, there we go. So on Wednesday, as the news was released, was 10.5%, expected 10.3, came out at 10.1. This is where it comes around and says that, and you can see the view that inflation in the UK is slowing down faster than expected. Inflation in the UK is slowing down faster than expected, which could mean that the Bank of England could be more likely to slow down on their future interest rate hikes, right? Slow down or stop on their future interest rate hikes. So with that, because of an expectation for rates to stop, we see this pushing towards the downside. We see price going from that 1.2140 level straight down within the hour towards the 1.2080 level. Okay, so again, that was news release there on the pound. And then you can actually see that it continued. It not only dropped to 1.2080, it went all the way down towards that 1.20 level. Why did it continue down? Firstly, inflation data from the UK. And also follow on from that, we did have a big surprise here from the US, right? The US retail sales number month on month last night, 9:30 GMT plus 8, we saw it go from a minus 1.1%, expected 1.9%, got released at 3%. 3%. So very big surprise in terms of retail sales numbers. Core retail sales was minus 0.9, expected 0.9, came out at 2.3%. Again, a big surprise. And because of that combined, we saw the pound dollar trade significantly lower, down to that 1.20 level. Okay, but bear in mind, as it trades down, and this news here, we didn't actually see, as much as a big surprise it was, we didn't see too big or too sustained a move for the dollar index. All right, I'll show you here on the dollar index again. H1 time frame, you can see that that move on the release of the news was only about 20 something pips towards the upside, right? Only about 20 something pips towards the upside, despite that big surprise in terms of retail sales number. Why is that so? Is because right now markets, or rather central banks, are fully focused on the interest rates and the CPI data, right? Are fully focused on the interest rates and the CPI data. Retail sales numbers, not so big an impact, more focus on CPI and interest rates. Through to today, employment numbers for the Aussie, again, just to highlight to you the focus that everyone's having on right now. Employment numbers, unemployment rate 3.5%, went to 3.7. Employment change, expected 19.8, came out at minus 11.5. So terrible employment data there for the Aussie. And what we actually saw on the Aussie was this morning, as it got released, we saw that big drop. But after that big drop, it reversed back up. Because, hey, employment numbers, while important, is not the big key focus for now. Okay, and that's why we see this push upwards. Following on from that, what else do we have tonight? 9:30 GMT plus 8, we do have core PPI and PPI numbers. after what has happened over the last couple of days, I do not anticipate that this will be a big price mover. I think that we're going to see some choppy price action, but not likely to be because of this. And then through to tomorrow, again, not much news for Friday. Bear in mind that with all that said, tomorrow, and what I notice is that after big news events, we do tend to have at the end of the week very choppy price action as traders and investors close out positions for the week. Right, when they head into the weekend, they close out positions. We're going to see choppy price action, possibly quite significant short-term retracements as well, right across the board. So just be extra careful there. Following on from that, Tuesday next week, we do have a lot of PMI numbers, PMI Purchasing Managers Index numbers, not likely to move prices too much because the focus is on inflation and interest rates. But on Tuesday night, 9:30 p.m. GMT +8, we do have CPI data to come from the Canadians. CPI data to come from the Canadians. The Bank of Canada has previously indicated that they will be slowing down or stopping their interest rate hikes. So the focus is going to be on CPI for Canadians. Is it going to show a slowdown? Is it going to show a sufficient slowdown? 5.3%. If it slows down, then great. Bank of Canada most likely to stay with not increasing rates. But if it increases like what we saw last month, 5.4, expected 5.2, came out 5.3, that could lead the Bank of Canada into resuming or restarting further interest rate hikes because it's still not at their 2 to 3% target range. Okay, so just be super careful with that. At this point, any questions? Any questions at this point? All right, no questions. Good. So on to Wednesday next week. Thank you, Sumit. So on to Wednesday next week. Look out. Kiwi dollar, New Zealand dollar. The RBNZ is going to release their interest rate decision. RBNZ with their interest rate decision currently at 4.25%. There, just 41 minutes ago was a statement or a headline that says the RBNZ should pause interest rate hikes following the cyclone. But the preview from the Westpac of New Zealand, Westpac Bank of New Zealand, indicated that we're expecting a 50 basis point increase from a 4.25 to a 4.75%. A 50 basis point increase to 4.75%. So if it increases interest rate, does the market go bearish? No, not particularly. So if they increase interest rates, it's likely or most likely going to strengthen, right? So looking at the Kiwi dollar here, right? I was actually doing this analysis before. It's currently trading at this level. Oops, let me take this away. It's currently trading right at this, just below this 0.63 level. Bear in mind, interest rate decision is next week on Wednesday, so there is quite a bit of time before this interest rate decision. And that's why I was anticipating that if we do see continual dollar strength, if we do see the dollar to continue strengthening, we could see price come down towards this 0.6255 level through to next week on Wednesday. Then I'll be looking for whether we could see a bounce back up, right? A bounce back up. Why interest rate increases from the RBNZ would see the Kiwi dollar, or typically interest rate increases should see the dollar strengthen, the currency strengthen. Right, so if it does drop to that point, then we could be looking for buying opportunity, 40 pips towards the upside, about 20 pips towards the downside, 1:2 risk reward ratio on the Kiwi dollar. But, like I was saying, it is a while, about almost a week more before the interest rate decision. What if the dollar strengthens further, right? More significantly on the dollar, we could see it trade down towards this 6190 or 61 or 620. Okay, 62 level. If I zoomed right out, go to the H4 time frame and show you, you can see that at 0.62, we saw it test in January and bounce strongly towards the upside. Again, in December last year, test and bounce strongly towards the upside. So it is actually at 0.62, a nice round number, a very strong support level as well. So if it does come down to this point, anticipation will be that a rate increase from the RBNZ could see price hit and bounce strongly towards the upside. Okay, so we could be looking at, bouncing off that 0.62 level, stop loss about 20 pips, take profit almost 100 pips. You're looking at almost a 1:5 risk reward ratio here on the Kiwi dollar. Okay, but I do want you to know that these are, we're looking into price levels, we're looking into price movements a week ahead. So it all depends. It all would highly depend on what's going to happen between now till Wednesday with the interest rate decision, right? Which level is it going to be? Now, let's say, for example, if it doesn't drop, if the dollar does not strengthen, it weakens because of retracement, it weakens because of people taking profit, and then you do see the dollar push higher, right? Key resistance level at 6365. It does break higher. I would be very careful. I would say that it does need to break above. I wouldn't say 6365 as a level. I would say this whole area is a resistance. If it does break above this level, then we do have the next resistance at 6481, right? Which I think this would be a very low likelihood situation where you could be looking for, a big 80 pip move, 40 pip stop loss, 1:2 risk reward ratio towards the upside. Could happen, but I don't see any reason why the Kiwi dollar should be climbing that strongly, especially with the cyclone and with what's happening in New Zealand. Okay, so I'm still looking for it to trade down and then bounce back up. Most likely to continue within this wide range. Okay, now following on from that, Kiwi dollar with their interest rate decision, we do have FOMC meeting minutes to be released. Not unlikely to have a big surprise here. We did have a very impactful press conference and FOMC press conference and interest rate decision the last time round. So I don't think we're going to see a big surprise here in terms of the meeting minutes, but pay attention to it. You never know. Following on from that, US GDP data to be released on Thursday next week. We will see a better forecast next week as well. So wait out for that. I don't think it's going to change too significantly. You can see that it always comes out around that range. Again, focus right now is more on inflation and interest rates, not so much on the GDP and all the other stuff. That's where this comes. Core PCE price index. You can see here, this is the Fed Reserve's primary inflation measure. Right, primary inflation measure. So this is going to be very important. Wait for the expectation to come up and we'll see what happens there. Just beginner, I don't know how to buy and sell. I'm just with robot. Hey, yeah, I mean, hey, what I would suggest, I do get that question quite often is, what would a trading robot be good to use? Is it safe? What's a good trading robot? What I would say is back test it out first. If it works, do it on a demo account, maybe try it out first. Then after that, slowly scale into positions. Not likely, and also understand how it works. Understand how a trading robot works. It's not always going to make money all the time, but you just need to know when to panic if it's not making money. Okay, so understand how the robot works before you apply it to a full on apply it. All right, so that was the news for next week. Core PC price index, GDP number for the US, very importantly, interest rate decision to come from New Zealand, then also CPI data for the Canadians. Not likely to be as big price movements as what we've seen for this week, but I think it's going to still set up quite nicely for some potential trade ideas and some potential setups to come around. So with that said, let's look at some of your questions. Gold. Right, gold, I think the last time I said I was going to straddle that and actually went down. Didn't go up, so we can take that away. Clear our charts a bit. Okay, why don't I do this? Okay, so gold had been trading significantly lower. Look at it. If you only just sold February down to here, you can see the levels. How am I doing that? Okay, all the levels down, you see this move lower. Okay, a big trend line towards the downside on gold. Then all that moved to the downside very recently, yesterday, Wednesday being yesterday, it found a bit of a support. It found that 1831 level as a bit of a support. A lot of tails. So if I did it to the body, it's about 1833. A lot of tails trying but failing to break lower. Trying but failing to break lower. Okay. And then it's bounced back up. So I do have this area. So I'm finding this point and this level here as a bit of a consolidation area. Okay, a consolidation area. So again, when I zoom out, you can see this pushing down trend line, consolidating right across. Things to look out for is now that it's consolidating around this range. What's the next step? Okay, what's the next step? If price consolidates and breaks above this resistance and above this upward or this downward trend line, we're possibly going to see gold trade up, right? How much higher can it go? We have a point about there, and then another point about there. Okay, so you can see this push possibly quite significantly towards the upside, but bear in mind, if it does push that strongly, that would mean that the dollar would have to weaken. Would mean the dollar would have to weaken. So watch out for that as a bit of a signal of where prices could go to. Okay. Alternatively, if it trades along this line, you can see this is a bit of a pattern moving right down, sitting right across, and very similar to what happened here. Look, before that we had that trend line, and then it's, let me just draw another one here for you guys. If I did that trend line, okay, so you can see here, assuming that we didn't know what happened before, similar trend line, price also trading within a range, broke up, but then after that it came straight back down and traded quite significantly lower. So with that, oh, where is it? Where's my undo? Okay, so now similar pattern. Similar pattern is to do that. If it does trade right across, right? If it does trade right across, might have a bit of a false break before trading lower again. So what I'm looking for, if it does break up, we could see a move similar to this before trading significantly lower again. If it does break that 1833 level strongly, then what you could be looking for is the next key support level here at I would say about 1819. Well, I do know that 1800 is going to be a good level. A nice round number, 1800. Okay. And then we could have another shorter term level at about 1820. Okay, so you can be looking at a move in that kind of fashion. If it does break down, then you could be looking at 1819 or 1800 as good support levels. Thanks for that, Syed. Happy. Okay. With that, what was the next one? Aussie CAD. Aussie CAD. I'll get to Euro Yen right after this. So Aussie CAD, wait, remember when you trade Aussie CAD, you have to think about what's likely to happen to the Aussie dollar first. Further strength on the Aussie dollar would see Aussie CAD push up. Weakness in the Aussie dollar would see it push down. And also on the Canadian dollar, if remember, we do have CPI data to be released next week. Weakness in the Canadian dollar will see this push up. Strength will see it push back down, right? And the way we're looking at it now, Aussie dollar sitting right across, looks like there is downward pressure. It's all going to be dependent on what the dollar index is going to do. Okay. So again, straight away, I'm looking at this possibly forming a bit of a resistance. And then definitely this point where it's touched and bounced. And it is trading right at a resistance level of 9260, right? Trading right there. You can see the last time it hit this level, it turned down. Right now, failing. Looks like it's failing to break higher. Looks like it's turning lower. Okay, so and also with that big downward trend, I would say that we're possibly going to see further downside on the Aussie CAD, possibly going to be driven by that weakness in the Aussie dollar, maybe on some strength in the Canadian dollar, right? If it does turn up, so if it doesn't turn down this way and it actually goes up, then I'll look for reaction to turn back down again. Reaction of this trend line. Okay. Hope I answered your question there on the Aussie CAD. And then the next one was what's the next one? DJI. No. Okay. Oh, straightforward, right? Look at it. Daily time frame. Big resistance here. 34,600, 34,604, 34,605. A big support here, 32,700. Trending higher. I don't see it breaking. I don't see it breaking this resistance, but it's currently at 34,128. Good upside potential towards the near-term resistance level. So I do think that we're going to see it trade higher, test that resistance, and do what it has been doing previously, test, and then reject back down. Confirmation of that upside move is likely going to be dependent on that price level at 34,300, because the last time we saw it test, reject, test, reject, test, reject slightly. So looks like we might see a push towards upside, but it's going to be dependent on whether they can break this 34,600 or 605 level. Another thing to add as well is that upward trend line as well, right? You can see it pushing towards the upside, supporting that move higher. If it does break above 34,604, then the next level, I know it's a bit hard to see, would be at about 35,500, almost at 35,500. Okay, so let's see if it's going to break 34,604. If it does, 35,500, not straight away. You can see that DJI doesn't move in a very straight line fashion, very choppy price action. So just be extra careful there. But most likely going to test and reject back down again. If it does test and reject, I think that we're going to see a relatively big correction, very similar to what we saw here, right? Why I say that is because it would be rejecting that resistance and also that trend line. So it'd be breaking two, firstly a horizontal, rejecting a horizontal level and breaking a diagonal resistance. Something quite similar to what we see here, right? You can see this, once it rejects, we see a big push towards the downside. I like trading this way. You're actually looking at immediate patterns of what happened. You can apply it straight away. You can see, at the key levels, what happened. Is it going to repeat? And quite often, the price patterns or the price movements do repeat from what happened previously. With that, let's look at the Euro Yen next. Where is it? Oof, what happened here? Okay, Euro Yen, zooming right out. Interesting is that it's approaching that level, or it's approaching that area, right? This area here formed in December last year, tested, failed to break below, tested, failed to break below. So it's a good, strong support level in December. And then now forming a good, strong resistance level. Anticipation at this point is a bit uncertain. If the euro weakens, then we're going to see this push down. But what I'm actually pricing in right across the board on all the yen pairs is further and significant yen weakness. I'm anticipating significant yen weakness. So yen weakness will push this towards the upside. Look for it to break above that resistance level. Next key resistance at 146.56. Very big move. I think you could even be identifying an interim level at 145.24. So you could be looking at buying opportunities. First one could be stop loss about 60 pips, 70 pips. Take profit at about 120, 1:2. And then also you could be looking at a big move towards the upside at 267, big, almost 1:2 or 1:4 risk reward ratio. Okay. Why a big move anticipated here? This is a breakout of a big move. Right? Since December, it's failed to break higher. If it does break above, we could see a big move towards the upside. Okay, so that's my view on the Euro Yen. Question is, hey, what if it reverses back down? If it reverses back down, a clear reversal will only be if it breaks below 143.20 because of what we see here, here, and here, right? So I wouldn't rush to enter a trade to the downside, only if it breaks below this level. Very similar. So this is the Euro Yen, very similar to my view on the Aussie, on the Pound Yen. Actually, let me just show you my view on the Pound Yen. Let me just find it. Okay, so I just wrote this up. You can see about 2 hours ago. So pound yen, again, same thing. I was looking at this forming a good strong resistance level, looking for this to push up to break towards from that 162.32 level towards 164, possibly even towards 167. So a big push to the upside there on pound yen. Also on euro yen, looks like that pattern is forming right across the board. Could happen to pound yen, Aussie, euro yen, US yen as well. So look forward to that. And if you want to read more about that, you have the link there for you guys. You can follow. I do post quite a bit there as well. Okay. Any further questions at this point in time? Without any further questions, please remember we do have a lot of, thanks Sumit, we do have a lot of big news events or relatively big news events, CPI data, interest rate decisions, GDP and core PCE price index coming up for next week. Please remember, trade well, trade safe, manage your risk, your leverage, your margins. I hope you had a great session. Thank you, Sumit. If you have any feedback, any comments, please let me know. Join me on the link above that I've sent, and I hope to see you all again very soon. Take care now. Bye-bye. Thanks, Syed. Thanks, Fan. Thank you all.